Welcome to a few investorship moments. We're going to take a moment now to introduce you to the web page for Investorship, investorship.com. This is what you'll see when you log on. You'll see this banner and you can scroll down. You'll see a definition or explanation as to what investorship is, some comments from other people about the book. And then we get to what is called the Investorship Calculator. And this is something you want to play with a lot because it's accessible right on the web page. It doesn't cost anything, but it can provide some insights that few other calculators can produce. We start over here. Let's just for now disregard the choose a category. This would be examples of what you might spend money on, but it's not really a necessary input for the calculator. And let's take an initial amount. This is an amount we're contemplating spending. It could be a daily expenditure, something we do every day. It could be a weekly, monthly, yearly. You'll notice the categories over here that you select. But let's plug in an amount. Let's say somebody spends $5 a day on a latte. That's a daily expenditure. And let's just as an example, say that we wanted to compare what the S&P index fund would produce if that same $5 a day had gone into it over a period of time versus say a savings account, which might be earning at best 5%. We calculate, and over on the right, we see a whole column of numbers. The inflation rate shows you what that $5 a day expenditure would be over time, adjusted for inflation. $5 a day adjusted for inflation in 50 years would be $388,000 spent. In 25 years, it would be $92,000 spent. So it may not be a $5 latte. It may be a $92,000 forfeiture of wealth over the next period of time. That's what would have been spent. However, the same amount of money going into an S&P index fund at the end of 25 years would be worth a little over $250,000, $227,000. In a passbook savings account at 5%, it would have grown to $117,000 plus a few little bit of change. How about over a 40-year period of a career? That $5 a day, a latte would have amounted to $231,000 over a 40-year span of time. Had it been redirected into the S&P index fund, it'd be worth $1,094,000. In a passbook savings account, it'd be worth $344,000. So the S&P index fund, even though it's annualized at 10%, versus 5% for the savings account, over time, it's worth 3 times as much as a savings account. And you say, yeah, but inflation is going to cause that to be a lot less. Well, that amount adjusted for inflation is $231,000. If it had gone into a savings account, you'd have more money than it would cost you to replace those same items. And conversely, if it had gone into an S&P index fund, it would be worth substantially more than it would take to buy the same items. That's a little confusing explanation, but we'll work on it. Let's say somebody starts off at a minimum wage of $14 an hour. In the course of a year, they earn about $24,000. Let's say they just said 1% of it, $240,000 or $240, and they do that every year. At the end of a 45-year career, they will have basically spent, or that $240 a year will have grown to be $339,000 cumulative expenditure. If it had gone into the S&P index fund, it'd have over $250,000. Not bad. If it had been in a savings account, they'd have $62,000. In both instances, they would have more than sufficient money to be able to buy the things that would have risen in price to $39,000. How about 50 years? That minimum wage person that puts aside 1%, $240 a year, adjusted for inflation, they'll have over $250,000 in their S&P index fund. How about if they put in 10% of their salary, $2,400 a year? Look at this. At the end of 40 years, they'll have $1,438,000 in their S&P index fund. If they do it for 50 years, again, somebody starting at 18 doesn't retire until age 68. Over that 50 years period of time, if they had just plowed in that $2,400 a year, which isn't all that much. May seem like a lot now, but it really isn't in the big scheme of things. They'd have $3,874,000 in that S&P index fund. Get in here to the Investorship Calculator, accessible through investorship.com. Scroll down till you get to this page. Remember, this is nothing more than the sign-in banner that would take you down to that calculator. Maybe you want to get the book. You get the book, you click here. You want to buy the book? Here's your choices. You can go to Barnes and Noble, Amazon, any of these places, and you can actually buy the book right online. It'll be delivered to you in a matter of days, or go to your bookstore. They'll probably have it available. If they don't have it in stock, they can order it for you and get it in a matter of days. That's what you can learn when you go to the Investorship website. We're going to terminate that right now, and we're going to stop recording. We're going to end the video.